Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report that's all about a company buying back its own stock, which might sound boring, but stick with me because sometimes these moves can be sneaky ways to make things look better than they are. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. We're looking at a Form 8K filing from Renewables dated May 9, 2025. This is basically a quick update a company gives to its investors about important events. The main event here is that Renewables is buying back some of its preferred stock. Specifically, they are redeeming, which means buying back 168,008 shares of their 8.75% Series A fixed to floating rate cumulative redeemable perpetual preferred stock. That's a mouthful, so let's break it down. Preferred stock is a type of stock that usually pays a fixed dividend, kind of like a bond. The 8.75% Series A fixed to floating rate cumulative redeemable perpetual preferred stock. That's a mouthful, so let's break it down. Preferred stock is a type of stock that usually pays a fixed dividend, kind of like a bond. The 8.75% Series A fixed to floating rate cumulative redeemable pays a fixed dividend, kind of like a bond. The 8.75 spec shab means it pays an annual dividend of 8.75% of the stock's face value. The company is buying these shares back for $25 each, plus any unpaid dividends, with the deal closing in June. It's important to know that a redemption is when the company buys back its shares from investors at a predetermined price. They've attached a press release about this, which is pretty standard. These kinds of announcements are usually carefully worded to put a positive spin on things. The document also mentions a notice of partial redemption as another exhibit, and they are promising to provide the SEC with other information on request. Now, let's step back and think about what this all means. A company buying back its own stock can be a good thing. It reduces the number of shares outstanding, which can increase earnings per share, making the company look more profitable. It can also signal that the company thinks its stock is undervalued and is a good investment. However, sometimes stock buybacks can be a way to artificially boost the stock price, especially if the company doesn't have better uses for its cash, like investing in new projects or research and development. It can also be a way to reward executives who often have stock options without actually improving the company's performance. In this case, Renewables is buying back preferred stock, which is a bit different than buying back common stock. Preferred stock is often seen as a hybrid between debt and equity, so buying it back can be a way to reduce the company's overall cost of capital or simplify its financial structure. Without seeing the company's full financial picture, it's hard to say for sure what the motivation is behind this buyback. Is it a smart financial move or just a way to prop up the stock price? Looking at these events more broadly, Renewables' buyback of preferred stock is a financial decision that could have several motivations. Without deeper financial context, the impact on the company's financial health is speculative. Alright, that's our breakdown of Renewables' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.